Good afternoon, ladies and gentlemen. Welcome to the KEFI Gold and Copper PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. We did receive a number of pre-submitted questions, and there was a lot of commonality in those themes. So perhaps during the presentation, if we take the pre-submitted questions and then submit your questions, that will enable less duplication. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today, and then we'll publish those responses where it's appropriate to do so on the Investor Meet Company platform, and we'll notify you by email when they're ready for your review. Before we begin, I would like to submit the following poll, and if you give that your kind attention, I'm sure the company would be most grateful. I'd now like to hand over to CEO and Executive Chair Harry Angustaris-Adams. Good afternoon.
Thank you, Mark. First of all, let me open by firstly thanking attendance, but also just highlighting that I'm mindful that there are some people on this webinar who are unfamiliar with the company. I've been asked to participate in a mining investment forum in a week's time, and I know there's quite a few people from that who will be watching this. But on the other hand, I'm also well aware that there are some people who are steeped in all the detail and background of the company, and therefore I apologise to those for whom I go into too much detail, and and in a sense the opposite for those for whom I don't go into enough detail. Without further ado, let me say that I'll give a brief presentation. I won't walk through the whole slideshow, but just before this webinar, we released our quarterly report, and we released an attaching slideshow, both on our website. I won't go through the whole slideshow. I'll just go through the introductory parts to it and just highlight the things that I think existing shareholders perhaps would like me to highlight. And then we'll have the question and answer. There were a few submitted already. I'll answer some, and Eddie Solbrandt, the Chief Operating Officer, will answer some. Okay, so now back to the presentation. On the screen is Tula Kapi. The gold deposit is that hill. On that hill is our camp. It's been there over 15 years. A serene, beautiful countryside. Never have any of our people out there been hurt by any of these highly publicised, or at least recently highly publicised, security concerns and incidents in the country. This is a quiet place. Having said that, it changed a lot since we arrived. And we took over the site 8 years ago ourselves, and the move to democracy has unleashed various destabilizing forces that are calming right down again now. But probably you're all aware that there was highly publicized conflict and instability over the last couple of years, which, as I say, is calming down rapidly now. Disclaimer, most people don't even read it, but I just highlight the fact that when we make predictions, we're not making promises, we can't give guarantees, we don't have a crystal ball. And I suppose we've shown that by our experience and by the surprises we've suffered in these frontier markets, the disclaimer actually does have a meaning, and therefore I do remind people that they're there for a purpose. I won't dwell on everything other than to make a couple of points on each slide as we go through. We were formed as a junior exploration company in 2006. It was, I think, a £2 million float. We had excellent prospectors out there from day one, getting us focused in on various parts of a region we really wanted to attack, so to speak, from a geological exploration viewpoint. And about 8 years ago, we moved into a more development planning phase, and we started to replace the team or complement the team with people who were developer operators, not only explorers. And the short of it is that we have made a couple of significant discoveries, despite the geopolitical turbulence that we've contended with in our frontier markets. We've worked our way through that, and we've made a couple of significant discoveries, and we've made an acquisition, which we then fixed up. So we've achieved a lot in a mining fundamental development planning sense. But the big change over the last year is that the political and regulatory environment in our two frontier markets, Saudi Arabia and Ethiopia, have changed for the better markedly, which means that we're now able to move very quickly compared to what we were able to do previously. It's not a secret that the area is prospective. There are many companies that have come in, not many of them able to move quite quickly enough in Ethiopia in particular, but they're all there and interested, including the world's two largest gold producers, Barrick and Newmont. We happen to have the first major development to go in Ethiopia, and the next two developments to go in Saudi Arabia. So whilst it may have been frustrating and tough at many times over the 16 years, as it turns out, we're in, if you like, a pole position in both countries today. Now, this colourful slide doesn't need to be dwelt on. It's just trying to make a couple of simple points. I'll explain. On the top is a set of lines that reflect what happened at Tulu Kapi. Why did it take so long? The next set down is what happened at Jibal Qutman. Why did it take so long? And the third set down is, with hindsight, really, what should they have taken if we weren't held up artificially, if you like, by systems that weren't ready for us. Up in Tulu Kapi, up in Ethiopia, the longest bar, that light blue line, doesn't even exist in the Saudi line. That is changing regulations that allow financing to take place in the modern sense. Ethiopia is a closed economy, capital controls, no foreign banks, regulated interest rates, and so on. And we've had to change all sorts of things through consultation and convincing the authorities to allow mining finance to proceed. Saudi Arabia has an internationally open market with large capital providers within the country. Another thing I'd point out is that darker green and lighter green shading bars up in Ethiopia, they don't exist in Saudi Arabia either. That's the need to move a community and issues to do with security at the site. Those problems don't prevail there in Saudi. On the other hand, there's a very long middle blue bar at Saudi that doesn't exist other than for one little short bar in Ethiopia. And that is the approval of a mining license has taken 8 years in Saudi Arabia. They've just rewritten their regulations, partly around the problem they created for us and for themselves around us. But coincidentally, they were both held up for different reasons, but I suppose roughly the same amount of time. And looking back now, it's all spilt milk, but it should be said and be open about it. If both regimes of regulations were then what they are now, we'd have been in production in both 4 or 5 years ago. Now, looking forward, the top is Tulu Kapi, the middle is Jibal Qutman, similar sized project in Saudi Arabia, and the bottom is Hawiyah, a bigger project in Saudi Arabia. And we're looking to start Tulu Kapi shortly. And within 6 months or so, Jibal Qutman. And then when those two are up into steady state production to trigger construction of the third one, which is a bigger beast. They're all open in resources, they'll all grow, but we're starting with the two simpler projects whilst we put our arms around and settle down the drilling and definition of the scale of the third one. Between them all, you're looking at, in gold equivalent terms, about 400,000 ounces a year of production. So, you know, this is a company that started as a £2 million exploration IPO that's now on a track towards becoming a mid-tier producer, and obviously a completely different ballgame of cash flows and balance sheet and so on. Now, what does that mean in values, and what are we striving to achieve here? The bar on the very left is the market capitalization of KEFI today, and all the other bars are to do with NPVs, or net present values. The blue ones are of the individual projects, our interest therein, and the red one is of the aggregate of the three individual projects, our interest therein. And I mean, net present value is just a theoretical calculation, albeit based on fact and real data, but it's only an estimate and a projection. Now, what does the real world actually value companies at? And it's fair to say that before they're in production, NPV is the most typical measuring stick of value. And as one de-risks from being unfinanced through construction on schedule, through getting into production, the discount between market capitalization and full valuation erodes and works its way away, and you become more fully valued. The first set of NPVs is of the company, of the projects today, and the second set is as they would be at the beginning of 25, when you've started production in 2 and you're about to start construction in 1. So that's what happens to the underlying values, just based on the NPV style calculation. Now, that's not the only way to calculate values. And a professional analyst who does this full time, has databases of stocks like these coming out of his ears, asked these people to pull out the African developers and rate them vis-a-vis KEFI on 3 scores. The top left-hand bars on 1 score, the top right-hand bars on another score, the top left-hand bar on another score. The bottom line is that if you then compare the 3, what does it mean for KEFI shareholders? Actually, quite remarkably similar. I suppose that's why they use those 3 measures. They tend to cross-check each other, and they seem to mirror each other a fair bit. I won't dwell on that, but it's just, I suppose, a measuring stick of where we're heading, or where we're aspiring to head. The bottom right is nothing to do with value. It's just, what's the grade of this thing, of the first project in Tulu Kapi. It's a high-grade open pit at over 2 grams. It's a high-grade underground at over 5 grams. And it ranks in the better half, if you like, of the grades of mines in Africa and probably internationally, which is a good thing. Now, financing. Most of the questions we received before the webinar were about the financing of Tulu Kapi and how and when, and details and that sort of thing being embedded in the questioning. And this chart it might look very busy, but it's worth explaining in a couple of minutes. And I'll elaborate much more on the financing in a moment, but just to paint a picture literally for a moment. The 3 boxes on the left, at the bottom on the left, Saudi Arabia, a partner providing equity, a development fund providing debt, both of them in the country, both of them well, obviously familiar with their own country, and both of them see us as the technical experts who bring mining skills to the scene. Pretty straightforward. We don't have to go looking for banks to bring to the country. We don't have to go looking for investors to bring to the country. We just have to deliver the operational expertise for planning, development, and production. Now, the other boxes are all to do with, nearly all to do with Tulu Kapi and Ethiopia. And that is that we bring banks, we bring contractors, we bring equity partners to the country. All the darker blue boxes are our companies, and inside those companies there are partnership boards and committees of different stakeholders. In Saudi Arabia, the Al Rashid family on the board as a controlling shareholder. We propose and we operate, but the Al Rashid controlling shareholder. Over in Ethiopia, we're the major shareholder, and the government, our partner, looks to us to bring the capital and human resources that are required by the project. Now, those grey boxes are basically the parties that are sitting around waiting today for the final plan to be signed off. And I'll come back to that. So we've got a whole syndicate in place, and the last bit of adjusting between the parties of the contributions and the pricing is in the grey boxes, so that we can, flow once the banks set down the ground rules. They're the boss, if you like, the lenders. There's only one unusual thing on this chart, and that is that on the top right-hand corner, there are entities that invest in the Ethiopian holding company, KEFI Ethiopia, down below in the subsidiary and in the project. And then one day, 3 years hence, at the then market prices, they convert through KEFI into stock. They've got special dispensation to do that from the government, and that allows them to eventually get their capital out of the country, in the meantime to support industrial development. And it's good for us because it's non-dilutive in today's terms. It comes out in the values down there when we're in production. I'll come back to financing later. There's a couple of slides on security. I'll hand over to Eddie, please. You there, Eddie?
Yeah, thanks, Harry. Just had to unmute myself. Security in the country, as you can see from this map, is settling down. We've built some very robust systems and processes wrapped in some policies in order to move people and goods around the country. If you know Ethiopia, you can see this map. There's a port called Djibouti on your right, and the roads up to and a little bit beyond a place called Nakem, which is 100 kilometres from our site, is all green. So it's a low-risk environment. As we get past Nakem and go further west towards Abyssinia and places like that, and Tagimbi, it becomes a little more precarious, and we have different protocols that we put into place to ensure the safety of our people and security of the assets that we may be transporting. We've road tested these systems now for the last 12 months, and in fact, we're so confident that our CEO in in Ethiopia, has gone to the campsite and will be going on to some of the surrounding towns to engage with the community, local authorities around the relocation that we're doing. Now, if I go to the next slide, if we put Ethiopia into context in terms of risk. Sorry, I just hit two there.
You do it, sorry.
Okay, sorry, Harry. If we look at this map on the left, we've got Ethiopia, we've got Burkina Faso, which is all a red zone. There are mines operating, not only general mines, but gold mines operating there. We look at Mali, it's largely red and orange. We look at Egypt, a little bit better, also green strips, but also a lot of orange in there, to proceed with caution. And perhaps the most salient, I guess, in terms of size and population base, is Nigeria. Now, the difference between Nigeria and Ethiopia is that a lot of the problems in Nigeria have been manifesting and festering for decades now. They're old problems that won't go away. Ethiopia's problems, if you will, are young democracies' problems. New governments, new regimes, old regimes broken down, and areas where there's disgruntlement, power vacuums, and so on and so forth. Several years ago, that country map of Ethiopia was all green. During the Tigray crisis, it was largely red. And as you can see now, and this is reasonably recent data from the FCDO, it's settling down quite a bit. As I said, so much so that our CEO is now travelling out to the mine site, to the villages around there, with precautions, ensuring that we're doing this safely. But we are quietly optimistic that this will get better. And if it stays the same, we're still confident that we can get people and equipment as required safely to site. That's pretty much it on security for me. Harry, I'll just pass to you again.
Yeah, the only thing I'd add to that is that as things go forward, we have 1,000 employees and 5,000 to 10,000 indirect employees, and it's an engine of economic development for the region. This project, once it's going, we have an airstrip on site, and infrastructure in place. Essentially, the situation today will be a figment of history, because the whole district out there will be intertwined with our operation, and they'll be our most effective ambassadors and protectors. Now, milestones looking forward. Essentially, having spent £90 million in 16 years to assemble these projects that are worth 200 to 400, depending upon how far ahead you look. Not assuming any growth in resources, or taking them as their resources stood last year. Obviously, the market cap is only a fraction of all those numbers, so it's got a long way to go to reflect anything like that. But therein, I suppose, lies the opportunity for anybody who does want to consider getting involved with the company at this juncture, as it's about to trigger to what I think are very important inflection points, being the triggering of Tula Kapi development, followed by the triggering of Jebel Qutman development. As outlined earlier on that bar chart of showing the two progressing and then the third project coming on. This is a very unusual situation to have a company that, after 16 years of hard slog, actually it looks set now to trigger two developments and then a third one, and in the space of only a few years to go from the situation that it was in as a junior explorer to being what is, I suppose, colloquially referred to in the industry as a mid-tier producer. Very, very unusual. I'm not aware of any company. I mean, I've been in this industry decades, so I just can't think of one that did quite this before. I'm sure there were, but I'm not aware of them. As I said, I'll pick up on the financing and go through some details there, which has been asked of us when we start the Q&A. But in the meantime, rather than dwell on talking, I'll hand back to the organizer so we can go into the Q&A.
That's great. Harry, Eddie, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab, just situated on the right-hand corner of the screen. But just while Harry and Eddie take a few moments to review your questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, will be accessible via your Investor Meet Company dashboard. As I did mention at the outset, we did receive a number of pre-submitted questions, and they did fall into a number of categories. And Harry, I know you took the time to try and put those into as many as we could, and I'm sure there might be some duplications looking through the live questions as well. But Harry, if I may, can I just hand back to you, and maybe if you could ask you to read out the questions and give a response, and then I'll pick up from you as time permits.
Okay. Well, the biggest set of questions was all about, can you please spell out details of the financing? How does it work exactly? Timing and drawdowns and conditions and all that stuff. And I apologize if my answer seems, motherhood to those familiar with these sort of project financings. But I'd like to go into more detail than perhaps we have before. And first of all, we had signed a term sheet with the banks in 2019. We were lining up to get going. Their due diligence was in full gear, and then things in Ethiopia started to play up a little bit, as we've all seen. But that exercise of due diligence for an African development bank in an emerging mining frontier took a couple of years. And to cut a long story short, various experts were brought in to check and clip and adjust and so on to make the banks comfortable wherever they felt appropriate. But by and large, it all stood tall, and we had term sheets 2019. Getting ready to launch in 2020. Now, as you may recall, last year there was quite a lot of publicity about the in-country disputes and civil unrest and a war in the north of the country, and it was parked, essentially. It was suspended. It wasn't the moment to trigger. In May this year, we reassembled as a syndicate and decided, let's get things ready to go again. The country was calming down sufficiently. We knew it would take some time to work through all the various aspects of pulling all the financing into place, and we thought we should get going, which we did. In June, an umbrella agreement was signed, setting out basically who's doing what within the syndicate, and setting out the sequence and setting out the process that we all had to abide by. Then July, August, we had to re-tender to get all prices up to date. I think most people would know there's been cost inflation around the world for a number of reasons. And bearing in mind that we have a fixed price lump sum engineering and procurement contract on the plant, and clearly engineers will not sign a fixed price lump sum without having the prices up to date. And we did all that. We adjusted all the numbers. We reported all that publicly, and we circulated an updated finance plan on what we would like. And that's going, doing the rounds, if you like, within the banks. At the same time, whilst it's not proper or permissible for us to talk out of school about the business between the other parties, particularly the banks and the government, there were some issues between a bank and the government. We did publicly allude repeatedly to the fact that the two banks required engagement and permission to deal on the same terms, and that problem or obstacle only went away in the last week or two, and I think we announced that as well. New government policies were set up, with us, for us, on international clearing accounts and market-based interest rates and so on. Now, as I said earlier, as we announced that, having circulated to the banks the update to all of them, but particularly the banks are the ones who have to go first. They're the boss, really. The updated finance plan against all the costings. We await them to come back with approval thereof. And it's not in KEFI shareholders' interest, really, to, how would I put it, to preempt them in any way. We want, having KEFI shareholders having sponsored for so many years so much capital into exploration and development, and our predecessors before us, and now actually proposing that the syndicate provides all the development funding of this whole project. It's in our interest to allow them to work through that, obviously. And first cab off the rank will be the banks. There are large regional investors, equity investors at the table, in part of all the syndicate meetings every week or two. So everybody's awaiting to go forward. The regional investors, some of them are very keen to invest because it takes their local currency sitting in Ethiopia and deploys it into a hard currency asset, in effect. And as I said earlier, some of them have a special dispensation to convert into KEFI stock 3 years hence. So this commitment, or this syndicate, is essentially answering the question: how does one that starts a £2 million company, that's now a £20 million company, that has 3 projects to develop, how does one have first-tier banks, first-tier contractors, first-tier investors effectively put up the money? The alternative is a large company would just put it up itself, perhaps. Most of them would go through project financing, I dare say. But that's the cost of the complexity, is its complexity. The reward of the complexity is that it's a highly risk-structured venture with the capital being provided by experts that support the junior explorer that's transforming itself. The companies are all first tier. They're all, very solid names. They don't want their names bandied around until closing. As usual in any country, when you're about to launch such an important project, you get all sorts of interference, and characters turn up to try to have a piece of it. And so nobody wants noise or interference until it's all closed, nice and calmly, and that's what we're doing. We've in effect circulated the finance plan that covers over 90% of the funds for the whole package. And then when the banks sharpen their pencils and come back to us, I just saw a message that the next meeting's on Friday, we'll adjust the allocations and make up the last 10% once we know exactly what we're dealing with. The sequencing is that we all have to be clear what the full package is. It has to be announced and disseminated publicly so that our share market shareholders can also understand it. Obviously, the share market can't price it unless it can understand it and be fully informed. So at the moment, we're just working through that process, and the next step is November 15 for the sign off of the finance plan, and then we proceed by the end of the year to launch with a full sign up of all the conditions having been satisfied or very little left. In terms of sequencing of money, the equity will always go first. Any residual component that we choose to put in as KEFI will be only after the market's been fully informed and fully digested. We announce everything in the proper way. And then and our co-investors will put money in alongside us at the same time, being released out of escrow accounts. And then the debt will come later. The subordinated debt won't be needed for 12 months, and the senior debt probably for 18 months. But that sort of sequence is the way it will run out. I hope that was of some value. I'm sorry it took a few minutes. The second question is, it's the second most popular question, if I can put it that way. When does KEFI itself need more cash to raise? how can it be accessed, and does it get any money back from all the other investors and loans? There is, in terms of the last bit of that question, there is a possibility that there'll be some refunds of shareholder loans, but that will be subordinated to all the other project requirements. But that's the tweaking, if you like, that we'll do between now and the funds flow. But putting that aside and coming back to the first question, since and many of the questions that were sent into us referred to the auditor's report and auditors saying there's a going concern matter. Well, the company doesn't have a cash flow. It's been listed as an explorer that raises money regularly from shareholders to spend, and that audit report. It's not a qualification. It's called a material adverse or something or other material matter. Is stating the fact that the company relies on capital to continue its activities pending the start of its cash flow. That audit wording has been there since 2006. And since 2006, the company has raised equity capital from time to time and forestalled that process by using short-term advances, typically unsecured, waiting for a particular milestone to occur before we do raise any capital. Now, obviously, the key milestone now is the closing of Tulu Kapi, which is so close now that we don't plan to make any public raisings pending that proceeding. And we have the access to go and get some short-term advances if we need to sort of drag it out for a month, 2 months, 3 months, whatever. But we've been doing this since 2006. The auditors have been using the same words since 2006. And frankly, the risks that we've worked through over the past 16 years are far, far more challenging risks than what we're dealing with today, with such a, so close really to triggering development, and with so many strong allies and partners and bankers rolling up their sleeves to do it with us. Next question is, with the price of gold generally rising over recent times, in simple terms, how do you account for the decline in company shares? I thought.
Sorry, do you mind if I answer that one?
Yeah.
It's a tricky question because it asks for a simple response, but it's actually a complex question. But what affects the share price, amongst a multitude of things, is consumer investor sentiment, whether somebody wants to be in or out of a sector, portfolio rebalancing. The AIM is down 40% now, as most markets are. Are we in a bull market? Is risk on? Is risk off again? There are an enormous amount of factors that affect a share price, including day speculators and traders. No simple answer to that. But gold mining companies don't necessarily have a share price that correlates with the price of gold. And you can look at larger companies like Anglo Gold Ashanti or Barrick or others that from time to time just work asynchronously. That's a matter of markets. And if we all understood markets very, very thoroughly, I suppose there could be a correlation. But at the moment, it's an imperfect science or a black art, depending on how you want to look at it. The next question that has arisen is, has the security situation along transportation routes improved, and will current environment allow for timely development of Tulu Kapi? As I said earlier, the region from Djibouti going west through to Nekempt is all green, and transport is flowing and has been for quite some time now, uninterrupted. Those routes are typically unaffected by the problems in the north and down in the west, and it's a free corridor. There are the usual risks on any road, traffic risks that one has to anticipate but can't always mitigate. They're random acts. But generally, transportation is good until we get to Nekempt and just after Nekempt. But in those orange zones and patches of red, we have safety and security protocols in place to ensure that we can move forward. Will the current environment allow for timely development of Tulu Kapi? We believe that what we have in place will allow for timely development of Tulu Kapi as we stand now. What we can't do is foresee the future. Our view is that it will quieten down and become better. But, we've been surprised in the past, and I've been wrong in the past, and we could be wrong again. But as it stands now, we believe that, yes, we can develop Tulu Kapi in a way that meets the schedules. And let's not forget, Harry mentioned this earlier, as more activity happens on the ground, we're currently in the process of moving some of the early project affected families from the land. It's a particular piece that we're using as a trial to move forward for the other 1,500 landholders. As those things become real, communities tend to gather around you and look after you in these environments. They give you early warning. They let you know if you're misstepping, and we listen to them quite carefully in that respect. And that's another key aspect, our community relations, which also leads me to believe that we can deliver this reasonably on time and reasonably on budget. That's pretty much it on that subject for me. Over to you again, Harry.
Next question is, where do you see KEFI in 24 months? Well, I think those slides referring to the sequencing of projects and the emergence of value, for want of a better term, I think are sort of visually the simplest I can summarize my vision. I think that, those simple slides and simple visions obviously understate the complexity of all the dimensions to what is happening here. And there are a number of things that we do, and we learn from everything we do, and we then bolster up for the next step. And that's the same with any startup of any business, let alone, fairly complex ones that are affecting the lives of so many people in so many ways. But I feel very comfortable that there's this mighty weight of support. And even the people who are interfering with us, and I don't want to dwell on this, there's always interferers when there's a big prize to be had. It's not because they're trying to stop it, they just want a piece of the pie. And that's okay, you see that in all countries. But there's this weight of pushing now. So I have no doubt that this is going ahead. I think from the point of view of organizational, what happens inside the organization. I mean, Eddie, you want to make any comments on? Let me just explain. I took off all my internal-looking hats, for want of a better expression, and handed them to Eddie a year or so ago. Eddie is an organization developer, systems builder, done it for large groups, small groups for decades. So Eddie is the boss of systems development and team development as we turn this company into what it will be in 24 months. Eddie?
The key thing, thanks, Harry, is I guess for us, building robust safety systems, environmental systems, and these are not in particular order, and then building capacity in the organization. Some of the questions that we received related around, how do you build a company that hasn't got a history of mining? Firstly, we use expats, but they're tasked not only to do their work as their skill sets dictate, but also to ensure that they've got backups, local people that they're training, bringing up to speed and giving experience to so that they can take the reign. And we've already started that process. We have our chief geologist is an Ethiopian man. Our country manager is also Ethiopian. We currently have 3 expats on board locally, but all of those are now grooming their understudies. And that's massively important, as you can imagine, because it's about how do you operate in any culture, and it doesn't matter. I mean, I moved from Australia to the UK, and I have had to adapt to the cultural differences between the UK and Australia. And one might say, well, that's very, very slight. It is, but in some ways it can be quite profound, and misunderstandings can easily arise. So having a cadre of very talented and very keen Ethiopians working with us and having them take over the reins in due course is massively important. It mitigates risk. They teach us a lot. They teach us how to work, how to negotiate, how to integrate into the environment, and we bring along a Western framework around governance, procedures, systems, and compliance. Yeah, that's about it on organisation development.
Okay. Question. Various shareholders have sent KEFI information on various media outlets, some free, some paid. We see KEFI stick to just one promoter. Can the board and Harry explain why so other many other outlets have not been explored? And will KEFI be stepping up PR? I've said before, please send any suggestions in. The only suggestions I've seen were, and maybe I overlooked something, were some blog sheets on the continent that we had to translate into other languages. But, in terms of media, and we're happy to do that. I'm not saying we wouldn't do it, but it wasn't exactly a major initiative. And perhaps I missed something that I was sent. I don't know. But it's not right that we use one outlet. I don't know what that is referring to. Just yesterday, I was interviewed by Proactive, by Edison, Directors Talk. When we put an RNS out, it goes out to all the news wires. So it gets picked up considered by hundreds of media outlets everywhere in the world. They don't all have to print it. So I don't really know what that's referring to be honest. If any journalist wants an interview, they're typically granted an interview, very rarely not. So I don't think that's a fair criticism, to be honest. But again, I might have overlooked something. And there's talk of institutional investors and maybe one coming on board. There's been a TR1. I've been asked this question a few times, and I've given the same answer, which is a simple truth. I'm aware of a few institutions on the board. They don't have to declare themselves unless they're over 3%. And if their shareholding is held in 2 or 3 independently run funds with different boards of trustees, they don't declare over 3% because they're not. That's it. I'm aware of a handful of institutions on the register, but clearly they don't meet the requirements to have to declare themselves. And clearly they're there staying under the radar until they see what happens as to whether they get more involved or not, I suppose. But I can't speak for them. But certainly, a junior stock is not the natural home for institutional investment capital. And whilst the AIM market and junior mining stocks and AIM have plummeted really recently, the only thing that's particularly happened to us is that volumes have gone up. So I suppose it's because of people suffering the need to liquefy and about to sell the stocks they can liquefy. But these companies of this scale are too small for institutions unless they particularly want to get involved as it emerges. And I like to think, at least, that what these institutions on the register are seeing is that there's serious business agendas, unfolding before us and being tackled by us, and that they can get more involved as it moves forward. That's what I can only assume that's why they're there. But, at the moment, it's a bit frustrating, I suppose, for the person who wrote the question because you can't see them. Rad Capital is there for one, but you can't see the others. Next one is, can you update shareholders on any progress that's being made of seeking a dual listing on the Saudi exchange? And maybe shed light on best expectations on when this may happen. Do you have a target date? I think, speaking as someone who's been involved with listed companies in Australia, UK, and Canada. I can say, with obvious sincerity, that we always are open-minded to look at any possibilities. The thing that stood out this year is about Saudi Arabia, and which is why it sort of popped up on the radar of the questioner and ourselves, is that all of a sudden Saudi Arabia, which has always been massively prospective, but also never before been open to business, really, for this sector. Not only is it open to business, but every second person in the mining space is talking about it now, literally, pretty well everywhere you go. It's pub talk all over the world, so to speak. And so, yes, we are looking at it. Yes, we are getting our head around it, understanding it. First things first. The first thing one has to do is hit one or two of these milestones, and then you unveil the next steps, the next set of capital providers. But the really critical thing here is that whilst AIM is so down in the dumps, it's palpable. I mean, you must all know that. In Saudi Arabia and even in Ethiopia, believe it or not, there are local investors who want to be involved. And there's abundance of capital in Saudi Arabia, but a dearth of mining expertise and experience. So we're fortunate that we have relationships in Saudi Arabia. I spend a fair bit of time in Saudi Arabia. So we're building on those relationships and trying to understand. But before we make public comments about objectives and targets, we have a bit more to learn to understand exactly how one goes about it with the right backing at the right moment for the benefit of everybody. A long answer, but it's not an overnight thing. You have to understand how to get set properly and explain it properly when we've reached some clarity of thought on the matter. That's a hot topic. Next question is that we bid for, in Saudi, press reports in Saudi state that our G&M partnership, our company there, are one of the two companies left bidding for the Saudi Ahmad Damad mining license. And a previous similar license went to a bidder in an auction for 60 million. How would we finance 30%?
I think the answer to that, Harry, is we wouldn't.
Yeah, you wouldn't. We don't have to pay for licenses, but the Saudi authorities are still sort of experimenting with how to open up the sector. The interesting thing about the $60 million auction was that it puts another interesting little number on something that's not too dissimilar to one of our projects. And the whole thing not even probably recognized at all on our stock market today. That's why, and I think it reminds me that the reader, the questioner of the previous question was asking about Saudi, and it's a very, very preoccupying topic. You're on the money, whoever asked the question. We're just trying to understand it before we sprout about it. But it's there's only two listed mining companies in Saudi Arabia. It's the birth of a sector. One's a government-owned company, controlled company. The other one is a mini version of G&M. Mini in the sense of its resource base. Its main asset is about a quarter of the resource base of Hawiyah, and its other asset is a bit less advanced than Jibal Qutman. It's gold. Good people, good company, in production. They're actually in production. That's a big thing. But as I say, relatively small compared to what we have already in G&M. And it's capped at $1.5 billion. Clearly, the person who asked the question has, picked up on this or something about that. And what it's telling you is that the capital in Saudi Arabia is chasing the mining sector. And whereas, in London, it's a bit of a survival test at the moment for most investors. So, it is a serious topic, and we're extremely well positioned in Saudi. The next two development assets in the country are ours. So it's we will do something about it. Next question is about warrants. I fear we will struggle to reach the trigger for the warrants. Previously, any spike has been sharply reversed by a deeply discounted placing or bad news. Well, I don't know if that's a question. It says long-time holders hope it will be different this time. I don't know really what to say. All I can say is that the stock wants to run, and we have to execute our closings properly so that the pressure is not on our stock, but the pressure is relieved from the stock. And that's what we're working on. And when apparently rumors were running around for a day or two earlier in the year, which coinciding with us raising some money at full market pricing with no discounts, I must say, as we were closing our deal at full market pricing with no discounts, the price that it had been for months, the stock took off because of some rumor about that Saudi story I just told you, I gather. That was based on some, bit of market gossip on some other company in Saudi Arabia. So the stock wants to run, it wants to go with us, but it needs to see the evidence, and that's fair enough. But, all I can say is that fear doesn't come into it, You make a judgment, you judge it objectively, and you go with where your judgment determines. And if it's a fearful decision, it's not the right decision. We're not fearful. We're dealing with it, and it will happen, and the stock will follow when it's ready. The next question is, a lot of investors, for whatever reason, were shocked how the share price crashed from 145 to lows of 50s on the last placing. The board made 3 excuses. This is a whinge question. It's not a question. The board was clearly able to go back to the group syndicate and raise an extra 20 million. Why can't you adjust placing prices? Well, I'll say it again, but please, can we move on? You're talking about a question of something that happened in April. But for months, we were watching the market. We were keeping the market fully informed. We went out at no discount to market. I'll say it again, no discount to market. We were starting to assemble a book. As we'd assembled the book, the price took off based on some rumor about another stock in another country. I don't know how it started or why it was driven like that. I got no idea. And it was embarrassing. It looked terrible, but it was not our doing. And the stock just immediately pulled back to the placing price. Simple as that, and I sort of stand by my previous explanation that the stock wants to run when it's got the evidence of real performance and real milestones, and that will happen. Another mining company last week was able to do a placing and managed to do a placing at only 2.5% below the share price. This was clearly a good deal for the company and shareholders alike. Although you can't comment on individual companies' credit ratings, but you did the placing in April to reflect high nature of lending in KEFI at the time. Maybe KEFI can too demand a better rate today instead of doing deeply discounted with heavy dilution. We're not planning anything. We're not planning to do a deeply discounted placing or anything. I think the point is right. Shareholders can buy in the market any time. They could have bought in the market in January, February, March, April at 0.8. They could have. We were placing at 0.8, and because some guy ran the stock for a couple of days, we got criticised. today the shareholders could buy in the market at whatever the price is today, and then the same in 6 months' time. It's a truism. We're not planning a placing, so please don't be paranoid about it. Next question is about my personal bonuses.
Yeah, perhaps I should take that question, Harry. As a company, as you'd expect, as a publicly listed company, we benchmark salaries for all our employees annually. We look at how we are to other companies of our size of the market and also what we can afford. We make recommendations to the KEFI board. It goes to the remuneration committee, and the remuneration committee decides what they'll accept and what not. That is the process. That's the process in every publicly listed company that I'm aware of, and that remains the process for us. It's transparent. It's a well-worn path. It's well known. And if anybody has any questions or concerns about it, Harry, I think I'd urge them to contact one of our non-executive directors through the info at KEFI Gold and Copper link on the website. I'm sure they'd be happy to answer any concerns that you've got.
Okay, thanks, Eddie. The only thing I'd say is, I founded the company. I didn't take a dollar out of the company for the first 8 years. No fees, no salaries. Why would I want to damage the company? I mean, it's not coming from the right place, the question, in my judgment. But it is transparent, and please write to the non-execs and ask anything, really. Next question, it's organisational development. I don't know if you've covered this already, Eddie. Would you like to read it out and then comment?
Yeah, I'm intrigued at the cultural challenges at getting first-tier performance in countries where the industry is new, especially Ethiopia, which does not have a developed business culture in rural areas where KEFI operates. What you expect and what you get must be very different things. How confident are you that we can deal with these challenges and perform to plan a budget? I'm going to go off-piste a little bit here. I did work many, many years ago for a steel company called Nucor in the United States. And they're in Alabama, as I recall, in a rural community. Now, you had a modern steel manufacturing plant in rural Alabama with no skilled labour. But what they did have is they had very good processes. They had good relationships with their employees. They paid minimum wage, but they had a good incentive bonus scheme, and all the right policies in place for people to air grievances, and they produced above and beyond anything that I'd ever seen anywhere in the world. In fact, they were competing with the Taiwanese at the time for steel. The point of that is that we intend building a robust environment for employees to perform. We're currently sponsoring a charitable endowment. It has one of the mandates is to form training for local people, artisans, we'll need tradespeople of all different sorts. We're engaging with the universities in the area to make sure we get training. And we're building personnel management systems right now based on some long-standing philosophies that we've used in the past to reward and remunerate people when the company performs well. All those help us, and believe me, when there's the right environment, people will perform, and if they see it in their interest and their family's interest, they will perform readily and they learn very, very quickly. We're actually quite lucky. There are an enormous amount of very talented and very well educated people in the area that we're working in, all waiting for a challenge and waiting for a job where they can plan out the next 10, 15, 20 years of their lives. So yes, it will be a challenge, but life's a challenge. But it's one that we believe very strongly that we can surmount. And as Harry said earlier, there's this enormous weight pushing behind us of people that want to contribute. The church is with us and behind us. Some of the banks are behind us and want to do some of the education pieces. There are so many people now wanting to contribute in this. our job really is to corral all these resources and make sure we stay focused and on message and on point.
Thanks, Eddie. Mark, we've just gone just over an hour, and I haven't had a chance to see how many additional questions there are that we haven't touched on. Is there anything there as organizer that you think is a burning question we really should answer? Otherwise, and if and when there isn't, we could undertake to look at them and answer them in writing later, but I don't want to keep people more than an hour unless there's something burning there.
No, great, Harry. Thank you. There's a number of questions, so thank you to Matthew, David, Steve, John, Jim, Barry, and so on and so forth, Frank. I think you've touched on some of the items, although I think there probably will be some here that you might want to review when you've got a little bit more time. And as I said, we can publish responses to these questions after today's event, and then we'll notify everybody on the call when they're ready for their review. There were a couple of questions about listings. Is AIM the best market? This is from David M. Thank you, David. Is AIM the best market for KEFI? And then there are plans to list on another market. Maybe that's one that we could just maybe wrap up on.
Yeah, well, it's a good question, and a lot of my colleagues are asking me about it because it stood out like the proverbials over the last 6 months. That you've got people in our region who now look at us. I don't want to sound conceited, but they look at us with some respect, because we've done what we've done and we're ready to develop such important projects for the countries, both of them. And particularly in Saudi, there's mountains of capital in an international capital market. The world's largest listed company is a Saudi company. And so and so little of the money is reliant on the AIM market. And the AIM market at the moment, I mean, no disrespect, but boy, it's tough out there. You guys must know about it better than me. But it's like dog eat dog out on the street in this AIM market. It's a completely different place to the positivity that surrounds us in the regions where our assets are. So it begs the obvious question. But I'd rather not postulate an answer until we understand what it means and how to go about it properly. But it begs the obvious question.
That's great. Well, look, Harry, as you say, thank you very much indeed for your time, and Eddie for your time this afternoon, and for investors for their questions, for which, as we said, we'll make those available, responses available when Harry's had a chance to review. Harry, I know investor feedback's important. There's lots of people on today's call that I'm sure are keen to give you their thoughts and expectations, but I wonder, before doing so, if I may, Harry, just ask you for a few closing comments to wrap up with, and then I'll redirect investors to give you their feedback.
Well, I appreciate all the interest, and and I apologise that the tiresome timelines involved with these things, much longer than I anticipated, which I suppose is a failing of a natural optimist who wants to build businesses and create value. I admit that. But then again, if I wasn't a natural optimist, I probably jumped off a building a long time ago and wouldn't have had a go at any of these things. I feel personally very proud of what we've done and where we're going, despite all the frustrations. But I think that it takes a certain caliber and type of people, and I can say that we have that in the company, and we have very trusting relationships. We were, in many ways, beaten up last year. I don't mean by stock market stuff. I mean literally by threats and other things on the ground. Nobody was hurt in the end, but we had to manage it very carefully. And I think those experiences, living through the trials and tribulations of a frontier market, but coming out as a backer, as a supporter, with teams in place, with partners and banks in place, has actually won us a lot more kudos than otherwise might have been the case. So hopefully some good comes of that. I think it should. But I've got no doubt, the next few years going to be a lot of work, a lot of implementation, but it'll be like a breath of fresh air compared to the last few years, in my view.
That's great. Harry, Eddie, thank you once again for your time this afternoon and for updating investors. Can I please ask investors on the call not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. On behalf of the management team of KEFI Gold and Copper, we'd like to thank you for attending this afternoon's presentation. I wish you all a pleasant rest of your day.